Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and we are going to cover the key details that this market is facing upon the open today. Stocks open in less than 30 minutes now, and we will see what happens. We did get some earnings this morning, but the big one, of course, is Nvidia after the bell. We'll look at what those earnings are supposed to be. How should we trade it potentially going into those numbers? All right, you guys know what we're going to do. We're going to start out with the pre-market data. Again, we are trying to white background. We're still working on the lighting, so don't worry about that, guys. But nonetheless, I wanted to make sure to pop for you guys here quite a bit. All right, so a couple things to go over. Number one, the S&P 500 closed right here yesterday. And today we are basically trading flat on the day, right over here. So again, you can see that that's almost a flat day on the S&P 500. All right, so when we're looking at this, we're saying, would this be what we expect? And the answer is yes, because you don't expect a lot of movement ahead of such a big earnings report. Basically, there's no major players that are dumping huge positions or buying huge positions in the market before they know what these Nvidia earnings are. Basically, it would be kind of almost a fool's errand, right? You don't want to be a fund manager and put in, billions of dollars just before Nvidia tanks and you look like a fool. Vice versa, you would not want to go short and sell a bunch and then they rip the stock up on earnings. So in general, a flat day is what I would expect, maybe a little bit of chop, but for the most part, sideways, up or down 0.5% on the S&P 500. Now, let's flip right into Nvidia. Let's get right into the meat and potatoes here. I have the earnings numbers up on the screen right here of what is expected. So what we have today is we have earnings are expected to be 65 cents a share on revenue of $28.24 billion. Now, I want to be clear, guys. They are, and the market expects them to blow these numbers out of the water, right? So if for some reason they don't, and that would even shock me, folks. I mean, if they didn't beat these numbers by a large percentage, I would be even shocked myself. So the markets are expecting these numbers to get beaten. The earnings whisper number, which is what the, kind of like what the market expects. This is what analysts expect, right? This is what the market expects. The market's expecting 71 cents. So what that tells us is that for Nvidia to go up, they have to even beat 71 cents per share on earnings. So they need to come in at, let's say, 0.75 or something bigger than that. Now, what we have to keep an eye on here is that ultimately the markets are going to look at these numbers, but they're also going to focus on guidance. Guidance to me is probably even more important, and I think if you ask any economist or analyst, they would say it's all about guidance. And ultimately, what we're looking for is, are they going to say that they still have margins at 75, 77%? Are they going to say that they are still projecting and raising their revenue guidance exponentially like they have been? Any sort of crack in the armor, folks, puts this company at extreme peril for a 10% decline on earnings. The implied volatility is about 10%. That means the options market is pricing in a move of 10% up or down on earnings. All right, so again, now looking at the chart, what do we have here? We have this parallel channel. I've talked about this in the previous couple days. We know we have this level. We kissed it here, here, and here. We then broke below, hit it from the underbelly, and sure enough, we are hammering on it right here. So the key is going to be, and I talked about this with you guys in the last couple days, is this a bull flag forming where we're going to have an up move, or is it a resistance hit that's going to get rejected to the low end of the channel? So these are all things that we'll have to kind of monitor and see how they go here on the charts, okay? So that's number one on Nvidia, guys, just going into those details. Now, I did want to cover the S&P 500 here on a daily basis. In fact, let's flip over to the S&P 500. I just wanted to show you guys something really cool here. I don't know if you're able to see it, but the Lux Algo indicator that I've created is live now. And if you have it selected, you can have the indicator pop up. And right here, it's basically a reversal indicator. It tells you that when things are likely, when probability favors a move to the upside or to the downside. And what you can see right here is this was a buy signal. It popped up on the chart saying buy right here. Target 1 was right here. We actually gapped above it, so you would have taken profits there. And then target 2, it even gives you the target prices when they're achieved. In addition, if the pattern fails or the signal fails, it also alerts you when that happens. So really cool here. Just on the S&P alone, this was your buy indicator right down here. And again, it works on all time frames. So daily charts, 10-minute charts, you can use it for swing trading, day trading, whatever you do want. Now again, if you're interested, just go to our website, Verified Investing, and you can sign up. It's about $30 a month, I think, or something like that. It's relatively inexpensive, but it certainly alerts you to these reversal moves in markets. And I would say it has probably about a 70-75% success rate, so really high success rate. And also what's nice about it, it tells you when it fails, so you know when to stop out. And honestly, that's some of the biggest stuff right there, is knowing when it's no longer valid so that you can step aside. All right, so we'll take a look at a little bit more in that realm. But what I did want to do is just jump over to ANF this morning. Abercrombie and Fitch is getting smoked here. This was actually a chart that I was short in smart money stocks and ETFs with members going into earnings. And we actually already covered this trade for 10%, over 10% gain on this flush here. So again, if we look at the thought process behind it and we go into the charts, we'll look at where the buy levels will be. But one of the things we had on the chart here, very simply put, was a chart where you had this pivot top right up here, but more importantly, it came down, bounced, came down, bounced, came down, and then broke, right? Which is very common. But what this does is it gives us a basis to know when the chart comes back to resistance. It's called a retrace to the scene of the crime. You've heard me say that a zillion times probably if you've watched these over and over again daily. So what we have here is low, low, and low. Notice how price fell. Then it came back up and it hammered into this level, which again was resistance. It was support here. It was support here. We'll put S's in there, right? But here it becomes R because it's resistance. What does that tell us? It tells us that a move up like this should get rejected. That would be the highest probability outcome, and that's what we saw today on pre-market action on Abercrombie and Fitch. The other thing I was telling members this too, I said, listen, anytime you hold a stock into earnings, there is risk, right? They could blow out the numbers and the stock could be up 10%, just like it could be down for 10%. It's all probabilities. But what I like about it was that you have a bigger macro overhang, meaning there's a cloud that's slowly coming into view for the U.S. economy. And what we know is that eventually the economy is going to slow more and more. I've still been projecting out a recession at some point, either end of year or next year, and that will ultimately hurt the consumer, which eventually brings it in. So even if it went up on earnings, you're protected by that bigger macro move that likely would push us eventually to the downside. Either way, we didn't need that. The chart was beautiful. The probabilities favored it, and it fell beautifully on the day. Now, it is trading around the 150 level, so the question I would have is, okay, well, where do we start to see technical support? And to be honest, there's not a whole lot here that I'm seeing right off the bat. I'm going to go back to my charts and just zoom out just a little bit. Okay, so this is giving us a basis right here. So now I'm starting to see some interesting things. All right, so what we can see here is if we take a trend line from the underbelly, there was this one here, and that's that's right around 147 to 148. So there is support there, and then there's secondary support right under here. Let me change my colors on my lines here to reflect that. But nonetheless, to be honest, I wouldn't probably mess with this. There's a gap fill at 131.63, and then there's a level at 126. So unless it falls a lot more, I think I'm going to stay on the sidelines on this. And again, just to reiterate, I'll show again the levels here. You have, if we jump to the chart, you have this pivot low right here connected to this low, which gives us this level, and then you have the gap fill right here. So that's your zone of multi-factor support. And again, it looks like it's right around 130 or a pierce of 130. All right, so that's Abercrombie and Fitch. Nordstrom's also reported this morning. If we flip over to Nordstrom's, JWN, that stock was up initially on earnings, but as we can see, it's all the way back down and heading to the negative side. So interesting to just take note of that. Next up, if we take a look, there were a couple other ones. Sentinel, one reported, that's a smaller company, not too much going on there. But also we had Box. Let's see what Box is doing. Box is up a little bit. Again, not a big company, but it is up just a little bit there on earnings this morning. And then we also have, and by the way, unless it's a big move, there's no trade for me. So you'll see me go through a bunch of these, and really unless there's a major move like on Abercrombie where it's down 10% or greater, like a big move for that stock, there's not a whole lot for us as traders to look at. Okay, other than that, let me just see if there's anything else. I think that's really about it. SJM, I think, was one that came out with earnings. I haven't looked at this one. Yeah, there's no volume here. It is down on earnings about $5 or $6, but again, no volume. As you can see, when you see these little candles with no like fluidity like this, that tells you right away that the volume is extremely light. And to be honest, what we want to remember is that when there's light volume, it's very hard to gain an edge. The spreads are too big. The whips could be, I mean, it could print down here, then it could print up here. You don't get the edge as a trader that you need. You need volume. You need liquidity for us as day traders and swing traders to maneuver in. All right, now, after the bell today, we do have some other companies reporting. CRM is one of them. I do have a level that I've isolated down on my chart for a short trade should it pop. I'm just going to change these lines here to be darker so that we can take a look. But if we look at this, look at these two trend lines converge, guys. So what we have here is we have on Salesforce.com, we have this high, that line comes down. Then we have this low, and this low right through here. And they basically converge right here at the 280 level. All right, so for me, as a technical trader, should we get an initial pop after hours on CRM, I will look to likely short right in here, starting around that 280 level. Now, based on where the current price closed as of yesterday, we have to see where it goes today, but essentially that would be about a $15, $16 move up, which is right in the implied volatility zone of what you would expect on the chart of CRM. Now, another company reporting after the bell, CrowdStrike. I'm sure we've all known about CrowdStrike or heard about CrowdStrike, right? Because, in fact, I was flying out to Oregon on a Saturday morning. We couldn't even get out because of the whole CrowdStrike fiasco. So then we had to postpone our trip for a week and all that nonsense there. But in any case, so far we're going to find out today with earnings what the real implications were of the fiasco that they went through. Now, I do want to show this, right? So this is really cool too, guys. I just want to change my lines here. There we go. And we have a secondary line right here. Let me just put that in gray. But essentially, when we did come down, this was a level we took in smart money stocks. It was the 618 Fibonacci retrace, right? So it took a lot of guts to step up on on CrowdStrike when the fiasco was occurring, but it was beaten down so much that you say, okay, listen, it's still going to somehow survive. I mean, it's almost like we even talked about this when this was going on, is like they're almost one of the only companies that can handle this type of stuff. And so there's really it's almost like a monopoly. You can't just get rid of them because they screwed up. And that gave us this bias to look for a bounce. But to do it on a technical basis, you take this low and you go to the all-time high, which is right up here. The 618 Fibonacci level was right here. And look at where it went. In addition, there was a gap fill right here. Two levels coexisting together. It gives you that beautiful opportunity, or at least high probability. Remember, nothing's in stone with investing, but at least the probabilities were in your favor. You got the bounce. Now, if this stock rips higher, I mean, where the heck would you short this? I mean, there's gap fills along the way, just above 300 at like 307. There's a gap fill there. I'm more hesitant because this has extracurricular issues going on because of this event. I'm going to be much more careful on looking to short it. Same aspect on buying it. Yeah, double bottom, but double bottom, I mean, if it goes to double bottom for a day trade, yes, that would be a no-brainer right around 210 to 212. But you still got to be a little bit careful on this one. But this one will be really interesting. I mean, Nvidia is going to be the market mover. There's no denying that. This one will be the market mover on Nvidia. CrowdStrike is more interesting just to see how much damage was done to their business. What do they say about all the things going on? All right. On that note, folks, what I want to do quickly is we're going to jump in here real quick and we're going to spin the wheel of appreciation. Remember that the Wheel of Appreciation yesterday ended on TradingView, a one-year subscription. Remember, you have to be a follower of Verified Investing on YouTube or on X, and then you also had to share it on one of your socials and post up where you shared it so that our team can confirm, otherwise disqualification occurs, that you actually did share it. So let's see what we got here. Who wins a 1 year free of TradingView, which again is a wonderful sponsor on our Wheel of Appreciation. And let's see what we got here. The winner is Global Finance Pulse-Z8M. There you go. So Global Finance Pulse is the winner today. Reach out to Verified Investing, support at verifiedinvesting.com. All right, over to the Wheel of Appreciation. Let's get started right here. Spin it around, round and round. We'll see where it ends today. Oh, there's a big one, guys. Winning Trader Series. So that's $5,000 right there. So again, if you share it and you want to win this, you will be entered. But remember, you've got to be following Verified Investing on YouTube or on X, and you have to share today's game plan on one of your socials. And then we'll put you in that rotation, that Rolodex. It'll spin around, and one of you guys will win the $5,000 Winning Trader Series. All right. Having said that, I was showing you guys the Lux Algo signal before. Remember, that signal is amazing to have on your trading view popping up, telling you when a reversal is highly probable to take place. I do encourage you to try it out. Try it out for a month, folks. It's cool stuff. It really is. And it simplifies it because it takes away the guessing. I've programmed it in, and I worked with their programmers over there at Lux Algo to make sure that it has all the criteria that I look for in that signal. And so really it's very defined, and it'll catch the high probability reversal signals. We saw it on the S&P 500 right there. It works on crypto. It works on stocks, commodities, you name it. If it's on TradingView as a chart, it will work there. All right, here's a quick break, 30-second break to explore Lux Algo.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, into Bitcoin's chart right here. I warned yesterday, I said the bulls had a chance, and if they didn't take advantage of that, we were in trouble on Bitcoin. And Bitcoin, what did it do? Flushed right below the pivot line. Now, again, when it was above the pivot line, was it bullish? Nope, because it didn't confirm. And confirmation, if again, we just discussed the Winning Trader Series, and someone will win that tomorrow. But the confirmation signal is like, it is a freedom. It's freedom to know when something could be a fake out versus a likely real breakout. Same thing on the breakdowns. When is it a real breakdown versus potentially a fake out? This is what happens. Markets try to push us to our limits. They try to fool us. Institutions try to fool us. Tactics like this change the way you invest and trade and make you much more profitable. So we knew that this was only going to be minor support here. Sure enough, it cut right through it like Swiss cheese here. Now we are getting a small bounce, but being below the pivot line now makes Bitcoin vulnerable for a move down to this level around 53,000, potentially retesting the low right here at 49,000. All right, now for me, if we can regain 61,500, that puts us back above the pivot line, but you still must confirm, otherwise it could be another fake out. Watch that really closely. Just really quick on this chart here, guys, I want to show you something. If you go over here and I just scroll all the way back, I just want to show you this. Look at this on Bitcoin. So Bitcoin, here it is, the indicator, a beauty right here. So if we look at this, you can see that the Lux Algo indicator picked up this signal. Target 1 achieved, target 2 achieved. And what's so cool about this, and I hope you guys can see it in the white background with this, I don't know how small this is, but the coolest thing about that is target 2 gets achieved, and that was a short on Bitcoin. But then look at what happened. Bitcoin then goes on a bull run. So it literally got you out at target 2 just at the bottom before it went like that. Now, there wasn't the signal popping up to go long there, but that's okay. Sometimes it'll pop up. It has a strict criteria, and you have to always follow the strict criteria. It doesn't mean there aren't other signals there, but per this signal, that was a really cool one. And if you scroll back on Bitcoin, there's other signals as well that were there. Here it is. Here's another one here. Look at this one, guys. I'm going back now to July of, I don't know what year we're in, maybe 2023 or something like that. Sell signal right here, retrace, falls, target 1 achieved, target 2 achieved right at the lows. Pretty cool stuff. I mean, again, for 30 bucks, it's like kind of a no-brainer, frankly. All right, in any case, let's get on to gold here, guys. Gold is pulling back today. Remember, I did caution you that there were some signals on gold that I was a little bit nervous about, mainly the RSI negative divergence. When you have an all-time high on a chart and there's an RSI negative divergence, it basically, there's like a red or orange flag waving, like caution, a caution sign. And I just wanted to point that out. Now listen, we're only down a little bit, but I do want us to just be a little cautious on gold here in the short short term. I still remain unbelievably bullish longer term. But I just think that, again, there are some signals that tell us we could pull back to $24.25, maybe even in the high 23s before finding a significant level of support. Silver also pulling back today. If we take a look at silver here, it almost achieved my level. Didn't quite get there, which is a little disappointing. Doesn't mean it won't on the PCE data on Friday, but nonetheless, we are getting a little pullback there on silver as well. Nothing to do here, just kind of a wait-and-see type attitude. Wait for the chart to give us a bigger signal. Oil today pulling back beautifully here. All right, so here's oil. You can see it was down more earlier in the day. It's bounced a little bit. Remember, I did tell you that I went short with my commodity members right here, so we're in the money pretty nicely. One thing to point out again, just throwing this out there, look at that. Buy signal on oil right there. Target 1 achieved, target 2 achieved. Lux Algo, baby, right there. That's pretty cool right there. All right, so in any case, very cool to see that working its way out. Remember the thought process here with the methodology. We have multiple hits. The idea is small bounce, and then you might get something like that, but we should see further downside, thus me going short with my commodity members. Lastly, on natural gas here, guys, if we look at natural gas, what do we have on this front? And on natural gas, guys, here, we can see very clearly that natural gas continues to push down. Again, I'll change these trend lines to darker trend lines in the future. I just didn't have time this morning, but I'm still looking for a $2 level. Just to be full and fair disclosure, check this out, guys. So here was a sell signal on natural gas. Target 1 achieved right here. So you achieved target number 1. And then it actually got negated right here. So you would have only had target 1 achieved. You would have stopped out on the second half for a small loss. That big of a loss right there after making this much on your first half. Right? So that's the beauty of it too, is it kind of conditions us to take half off the table, and then it kind of, you're playing with the house's money, because even if it stops out, you take a smaller loss, you still netted a profit on that trade on natural gas. So again, you can see it works on commodities, crypto, stocks, everything here on the Lux Algo side. And don't forget, guys, if you go to verifiedinvesting.com, and you go to the top of the website, it has the drop downs. Look for AI and algo scanners type stuff. That stuff right there on the charts. In fact, let me see. Maybe I can even bring it up here on Verified Investing. Let's see if we can. Yep, there we go. Right here. Let me go to that right now. So right here on the Verified Investing homepage, it's right here, guys. Gareth Soloway, Lux Algo Reversal Signal Indicator. You can go right there. It'll take you right to Lux Algo, get you to purchase it, and then it'll be on your trading view. You'll have to open it up on the trading view, but bottom line is it's right there on the homepage, drop down, this one right here. We also have the scanner that we have, which is a little bit more in-depth. It's got, this is based on 1 or 2 signals. This has about 8 to 10 signals in it. So this is the more complex version. It doesn't show up on TradingView, but it has a pop-up and so on and so forth, but a lot more signals coming out on this one. But nonetheless, Lux Algo to be on TradingView, it's a no-brainer, especially for 30 bucks or whatever it is. All right, guys, I have to get going. I'm going to trade this market. We're going to be trading Nvidia earnings after hours today as well. Thank you all so much for tuning in. I'll talk to you soon. Take care.